All right, what's going on, everybody? Welcome back to another Roundup edition of Forward Guidance. And after a very fun previous week, a Roundup with the Macro Dirt Boys, it's back to just us two. Quinn, what's going on, man? How you doing? That was an insane week. Are you alive?
Yeah. Is it Friday yet? Shit. I'm ready for the weekend. Hopefully, my goal, hopefully Trump takes tomorrow off and hits the links, does like a 72 hole 3-day golf bender and just shuts up for like the weekend at least.
I would love to do the same thing. I think we were just saying that both of us are just, it's been, just full on at the screens for at least 12 hours a day right now, just trying to stay on top of everything every day. And yeah, I mean, you can see in the bags under my eyes. It's been a big week, so feels like we're almost through it. But yeah, man, it's been a big one. Okay, a couple quick housekeeping points before we get into the thick of what everybody's looking for. Quick shill, permissionless 4 coming up quick. We, pretty much a back-to-back situation for conferences this spring for us. It feels like we just finished Digital Asset Summit, but we got permissionless coming up real quick, June 24th to 26th in Brooklyn. This is a bit more of a crypto, builder and devs type focus conference. It's going to be a ton of fun. We're really leaning into that. Quinn and I are going to be there, going to be chopping it up. So yeah, get your ticket. Prices go up. If you looked at what happened with the Digital Asset Summit, we pretty much sold out, and that was as prices were skyrocketing. So yeah, use the code FG10, get your tickets, come on by. It's going to be a good time. They've been really fun. I've enjoyed them a lot.
Yeah, that's going to be a good time. Summertime in New York, good vibes are out.
Oh yeah.
Get some West Side Highway runs.
There you go, in the heart of Brooklyn. But yeah, okay. With that aside, chills aside, I want to start the episode by just hearing about how both of us navigated this past week. So obviously last Friday was when the climax started to hit of the panic. We started to see the margin calls happen. Everything was getting sold off. Pod shots were blowing up. Basis trades are blowing up. Treasury boards are blowing up. And yeah, it felt like fear finally hit. And we started to talk about, on that last Roundup episode about, this is the time to close your shorts. That got tested a few percentage points lower on, the S&P than when we were saying that. But, it was roughly speaking somewhere around the bottom. It's never going to look pretty. Like we said, you got to eat a few shit sandwiches to catch those knives. But yeah, man, Quinn, I want to hear, what was your framework throughout the week? How did you feel like you managed to stay on the right side of things? What were you looking for, and what were the big signals for when to move with size here and conviction?
I mean, I think early in the week, there was that big tell with the fake headline and what risk assets did. So that sort of gave a signal that people were looking to reallocate once Trump or someone says uncle and just didn't know when. And then there's the uncertainty of when do you buy here? Is uncle 3% or 5% lower? So we kind of had levels set out from earlier in the year that we thought would be a pullback. Honestly, that in January we said 54, 55. I can't remember. And then we did say, then we kind of changed it in March to 51. Didn't think we'd get as low as we did to kind of almost flush the 2021 highs in the S&P. But, stuff happens. So for us, we sent an email to investors on Thursday night of last week that said, we think we're within, we said, start scaling in between Friday and I think I said Tuesday of next week, the next 5 trading days, Wednesday of this week, because you just can't predict it. And then, all these headlines come through. And so we felt we were there. We felt that the market was pricing in all of the bad with none of the good. It's going to be a little bit before the economic data completely rolls over. I think I mentioned last week that, the Fed should be talking about cuts here with oil and many commodities in the gutter and, the data slowing. So yeah, it's just one of those where unless you're at the screens every day, able to trade and execute, less is probably more. And there's a drive to want to pick the bottoms, but as we saw today, it felt a lot better buying today's retest than it did stabbing all of last week, so or all of earlier in the week. So yeah, it's one of those where sometimes you V up and you don't look back. Sometimes you get the retest. Like it's just you just got to leg into it. I think is the main thing. Once you feel like you're at an area of like, I mean, VIX 50 for 4 days straight is like, all right, people are going to explode if this continues. You could feel that some decompression was required.
Yeah, totally. I wrote out a tweet on Sunday where I sort of threw around the ideas of how I thought, the mechanical pure market structure aspects would play out, and the way, just from experience of I haven't, I'm still young, I admit, and but been through 2020, been through December 2018, which was a similar situation in some ways. Traded a lot of the first administration for Trump, and the way I just felt like it would go would be just based on the close on Friday, where we just closed the lows, and it was like the true first panic that we would get the futures open on Sunday night, and it would just go almost limit down, and everybody and their mothers would then be like, oh shit, I gotta sell now, like this is gonna be bad. And then often is the case during those situations, by Monday morning you see us have that final flush, and then the capitulation there, and then oftentimes that will lead to a pretty sturdy bounce. We had that trial balloon situation on that day, which I think both of us called that out as being a bit of a coin telegraph moment, where you see what can happen. And there was signal. It was just like I said, it was so specific in terms of the language there that you just felt like you had to believe some version of it, and that played out true. So we saw the green close on then. We had the turnaround Tuesday in some form as well, where we opened up over 4.5% and gave a lot of that back, and then we had the oh shit moment where, okay, a lot of this is actually going to become real. And yeah, that was pretty lucky, I would say, like that a lot of that came to fruition. There's obviously a lot of just hitting buy and just closing your brokerage right after and going for a walk. Like you can't time this perfectly. And yeah, man, it's just about sticking to your guns and waiting for it to get out there. And now we've had that, obviously yesterday, one of the biggest rallies of all time, single day rallies of all time, and it was really interesting. I want to hear your thoughts on what you think what was the key cause of that, because the night before that happened, I was just looking at the 30-year go up 20 basis points in 2 hours, and I was seeing that happen, seeing a lot of monetary plumbing parts of the market start to strain a bit. And this chart that night Jim Bianco posted, where it's just showing the divergence between oil and treasury yields, and you don't see this often at all. And same with just looking at like between inflation swaps and term premia. It's basically the same chart. Huge divergence. At that same time, we saw some pretty significant deleveraging. And so this was actually the chart from yesterday, just looking at monetary plumbing stress. And you could see this was the first time where we were above zero outside of quarter end periods, where there's always typical strain. So put that all together, you had some bond market fracturing start to occur, and lo and behold, pretty quickly, Scott Bessent called up Trump and said, "Hey, man, like, look, we gotta do something here." So I'm curious, Quinn, like, how are you thinking about the game theory of that? Obviously, they came out with messaging that this was all part of the plan. It's just we wanted to get everybody at the table, and there's no way you could have gotten every other country in the world at the table to negotiate those deals. I'm definitely pretty accommodative to that view, but obviously they had to balance it with, perhaps there was an agreement where, Bessent said he'd come to Trump when he saw actual financial instability start to occur, to say, hey, we got to move up the timeline a few days here or a couple of weeks. And, this is the time to, show our cards, because we've been keeping them close to our chest. And, here's the big game. It's actually China. So yeah, like, how are you thinking about all of that?
This specific case, a good analogy I like is when Druck would have a good idea and Soros would 3x it or whatever and say do more. I think, which I guess people still don't believe, that Bessent is the mastermind behind all of this. Like if you think Trump's some rebalancing, like he's not, like it's Bessent, and Trump is taking his plan and putting his spin on it. It's like when you do an artist does a remix of a song, it's like, here's what needs to happen. And Trump says, well, this is how I'm going to go about messaging. This is how I'm going to go about raising hell and negotiating. And I think it's the classic, like, hey, we're going to make sure they know we're serious. And Bessent, anybody else in Trump's shoes would have said, probably 3-4 days ago, earlier, would have said, okay, enough's enough. I'll come to the table. And Trump's like, no, we want them to really know we're serious. And then, and Bessent's like, okay, but you're going to know the ramifications. And then it gets, and it's like, okay. Like, and the thing is a 20% equity correction is completely normal. And if it happens all the time, like once every 2 years, I think on average or whatever. So it's not like the most normal thing, but if your bond market can't handle that, like these are problems in the market and your country's finances well preceding any of the current market events, right? So you have everybody saying, oh, no one trusts the US and no one wants to buy the bonds. Yeah, there's probably some of that, but like it's also this basis trade, which is a huge, these hedge funds are levering these, they're scalping tiny basis points on, long the cash, short the swap, and scalping basis points levered up to infinity. And that also was like, that's completely known by the Fed and Treasury and basically supported and encouraged. So these are all underlying issues that preceded this market bout. And when the move index hits 170 or whatever it did intraday, people have to step in and do something. So given where inflation swaps are, oil is, like, I don't buy that it's a real structural problem. And I also think like I have a hard time understanding people who say like Trump's an idiot for his policy initiatives, but then pointing at the bond market, because the reason the bond market would be doing any of this is because we've running an unsustainable, unbalanced budget for years.
What stablecoins did for the US dollar, Ondo is doing for stocks, bonds, and more. They're making real-world assets accessible on-chain, laying the foundation for the next wave of financial innovation. With tokenization, Ondo Finance is transforming how financial assets are owned and traded. Discover how Ondo is revolutionizing capital markets at ondo.finance. That's ondo.finance. Restrictions apply. Yeah, I mean, what I will say is that, like, how else would you get to this point in being able to have every, they say 75 countries at the table talking about negotiating a deal. So, obviously we're seeing the narrative shift now to, oh, okay, this is all about China. There's, let me see if I can find the chart that, here we go, that Anna Wong created, just looking at comparing the two different outcomes that we had. So, this is looking at the tariff composition before the pivot, and what is the weighted effective tariff rate, and it was just under 30%. And now we've seen it basically be transferred towards China now, where if you're sitting at 125%, and I think there's news that hit the tape that it's actually 145%. So, you could call that pretty much even now in terms of the effective tariff rate. And so I think, now we need to think and game out what's next. But I do want to give some credence to the idea of how else would you get to a point of trying to get everybody to the table to get these deals done. Because here's the thing, if you're trying to go after China and trying to, decouple from China and get the Western world to decouple from China, and if you want to even isolate them in some ways, if you don't have all your allies surrounding that idea and all for it, they're just going to reroute shipping away from China to, India and Vietnam. And then those 125% tariffs or whatever just become moot. So I do understand that, they need to get everybody at the table here to go after China at once, or else they can just basically, sidestep these tariffs. What do you think about that notion?
So here's an example, and this is my best expectation of what's going on. Rewind the clock. It's 2019. No one knows what COVID is. COVID hits, starts in China. Rumors that it's a potential man-made, potentially even, war type pandemic medical kind of thing that they may have purposely caused. I have no idea, and not speculating. I'm just saying there, when it first hit, people called it the China virus. People didn't know what was going on. They didn't know if it was purposefully or not. But what everybody realized and what became basically commonplace and well agreed upon was, holy shit, we rely on many untrustworthy counterparties on many mission critical imports, goods, medical devices, pharmaceuticals, infrastructure pieces, resources, materials that we need on a daily basis. And there was this big panic, and we saw what happened to markets and the stability in the financial system and day-to-day life when that was threatened via the pandemic. Don't take any of that. Like, that's just trying to describe the facts and the hysteria around the situation. Okay. Fast forward to today. Nothing happened to sturdy our defense systems relative to that moment. We talked about it for a year and nothing happened. No one had everyone was just focused on the stock market and AI and semiconductors in Taiwan. Okay, well, sitting here, if you're if you have privy to information that China's going to invade Taiwan in 2H25 or 1H26, how best are you going to prepare you and your allies for this event? Because if that happens, the whole world calls for China's neck and calls for a stern response. Who is Europe and everybody else going to look to lead that defense? They're going to say, US, where are all your aircraft carriers? Why are they not in the South China Sea and defending? Why aren't they over, defending Taiwan? And it's going to be like, okay, well, we told you that you should probably stop relying on them for everything. Because, oh, by the way, if there's a conflict in Taiwan, it's very likely that Vietnam and all these neighboring countries are going to be blockaded or, at least disrupted from trade. And this is probably the Trump administration's way of saying, hey, prep yourselves, start becoming self-reliant, both from a defense perspective, from a manufacturing perspective, and start reshoring and friendshoring some of these things, because if this might happen and you're going to be flat-footed. Additionally, we also know that no politician, left or right, wants to cut spending. The problem that Bessent harps on, and everybody is very clear from an economist perspective, is we have a spending problem, not a revenues problem. The average take rate of the U.S. government has been stable for like 100 years, and the spending percentage deficit is at extreme highs, and no one will drop that, even Republicans. And so this is another way for Trump to gain negotiating leverage, where he says, all right, you guys don't want to cut anything from the budget. All right, well, I'll go, super aggressive here and really rattle the cage. And you have all these Congress people saying, oh my God, Trump, stop. Like, you're going to jeopardize our chances of midterms, blah, blah, blah. And now he's got them asking. And so now he can cut a deal with them and say, okay, we just extended tariffs for 90 days. What's 90 days from now? July. Okay, what's in July? It's a month before, it's right before they go on recess for their August break. And it's right before the X date for the debt ceiling. And he can say, hey guys, pass the budget, cut the spending, get these things through, or I'm going to ramp the tariffs back up and you're going to have problems in midterms. So there's so many angles of this that, there's just no critical thinking left in media or, mainstream or any dialogue for that matter. Every group chat I'm in just like reads a headline. But these are hard things. And like, it's not a president's job to support the stock market. I know that's what it seemed like for the last 4 years, but that's just not what you are supposed to do as the overseer of a country. It's one thing maybe you have an interest in doing, but there's a lot of other things to running a country. And I think that's just the message they're trying to get across. It's not that they're trying to sabotage or crater anything or bring down stocks just to spite the rich. It's just that some of these things are byproduct, some of the byproducts of these changes that benefit, in their view, the country long-term, result in lower asset prices. And they're just canceling the view that they should do everything to pump assets, which was unsustainable anyway. So that's my high level view. And and it might not work. It might cause a recession. It might cause bigger problems. It might not ultimately work. Yeah. And then people will live with that. And I don't know if it will, but it wasn't working what was going on before. It seemed on the surface when equities were trading at a 22x forward PE that it's all-time high and unsustainable, liquidity driven. It seemed like it, but this just showed who only cares about their 401ks and not like the sustainability of the country. I don't know. It's just interesting.
So within that framework, my question now is, how do they navigate the bond market through this situation? Because, to your point, like I think the Wall Street Journal came out of a piece last night, just, kind of the inside look of how that pivot came forth. And there was a line in there where, Trump is saying to inside circles, like, I'm, roughly willing for a light recession, but I want to make sure this doesn't become a depression. And within that context, navigating that, because, if the floor falls out of this, and especially the bond market, then you start to have to widen deficits a ton. And then, the question of who owns the bonds comes forth. And so, yeah, I don't know. Like, how are you thinking about the bond market at this juncture here? Because obviously we're seeing the 30-year, it hit 5, that triggered the put of, or it brought forward the put, we can't let that happen. And now we're seeing a bit of a retest. Yeah. How do we get through this there without losing the bond market?
Nothing will crash the economy quicker than 5% bond yields. That will completely halt any housing activity and, really affect, all these things. So they need to get the front end down in a way that does not restoke inflation. And I think they have room. The 2 years saying they have room, the 2 years at 3.85, to lower policy on the front end in a stair-step fashion that does not, one 25 basis point cut or 2 25 basis point cuts over June and July, or May and June, or May and July, is not going to like restart inflation. But what it will do is help small businesses who finance themselves from the front end. So it provides relief to the private productive sector. And then they need to accelerate the SLR relief. And frankly, just the only really thing to do to solve it, the problem here, is the spending problem. And they have to get the budget reconciliation passed with real cuts, so the market doesn't freak again. But we all know how these things end, which, in many times is QE. I would expect in May they bring QT down to 0, maybe. Like, why?
Yeah,
given these issues,
I think we're both saying the Fed needs to start to do something here, and it's quite shocking to me. Like, it just tells me, we had the inflation print this morning, which, you had that ice cold print, and the curve sold off, which is super interesting. Like, so these are a couple charts here just at the CPI prints here, and core CPI was just in the total gutter here. 0.1 month over month. Median CPI was somewhat high, elevated, but if you just look at super core, which, if we just rewind to, I'm old enough to remember when Powell said that super core was what he was looking at. And, that's taken into the new lows here, right? Since this cycle began. So, it really does feel like there needs to be some moves. It's interesting to compare that to inflation swaps, which I have here. And you can see the front end of inflation swaps is elevated. And, that's just, price level increase, tariff related concerns. And, we can debate the validity of them, but I'm definitely on the side of fading those. But generally speaking, I think when you compare to inflation swaps and just the CPI prints that we've been getting, to me, it feels like all clear. And I feel like the biggest reason the bond market sold off is literally just like what we talked about. It's the basis boys getting carried out still. I think there's still bodies that are being counted up. And I think that's leading to a lot of noise in the bond market right now. But I think the fact remains that there's room to cut. There's plenty of room. It's really interesting to see somebody like Fed Goolsbee was on the tape a lot today, and he's just, that guy's the most politicized FOMC member I've ever seen. He was talking about how there's tons of room to cut, and that we're far away from neutral in November, and now he's one of the most hawkish FOMC members around, and he's talking about just terrified of inflation. And it's like, dude, come on, like, we are, I don't know. There's room to move. And this is the concern for me, is that the Fed is complacent. But yeah, something needs to change here.
Whenever there's a headline or like a big kind of charge, or there's always truth to some things, right? And in the whole like disband the Fed thing, what are people really at when they are upset with what's going on in the Fed? It's spending billions of dollars to employ like political mouthpieces, and supposed research for outcomes that continue to be really not sufficient for a well-functioning. I mean, it's not to say like Powell has done a bad job. I think he's probably navigated things better than most. It's the underlying Fed. It's all the other hundreds of employees making $400,000 a year who, and like they need to just like this whole forward guidance, this whole like Goolsby, all these people need to shut up. Like their words mean nothing. They pivot every 2 weeks. No one listens. Like it's just incredible, honestly. Like it's the classic like maintain relevancy, so then you get a better paying job out, or you get the stuff under the pocket. They're day trading. Like it's kind of a joke, honestly. But yeah, it's hard for them. It's hard for me to understand how they're so proactive now, and when they've been so wrong so many times, and then prior they were so reactive, and it just the credibility. I mean,
what do you mean the opposite? They were cutting proactively, but now they're sitting on their feet and they want to react.
Well, but I'm just saying that is true. But and I was more so referring to them historically for months and months. We don't predict changes. We react to what we're given in the data. Okay, well, if you're going to react, inflation swaps are in the gutter. Oil's down 25%, and CPI is coming in fine, and unemployment rate is going up. So the reaction to that would be to cut rates.
This is the thing. Like, yeah, you brought up oil. This chart is insane to me. Like, look at this level we're at now. Like,
it is wild.
Like this is the biggest driver of CPI. If we stick around here or even go lower, like, April CPI is just going to be obscene. We already had a deflationary print. Like, especially if on the margin, these, we're getting this ratcheting down of tariffs for the rest of the world. Here in Canada, we're in the midst of an election. I think a lot of people don't realize this, that the reason that there's nothing happening with Canada right now is that we're in the midst of an election cycle that's, happening in 10 days or so. And, Carney made the commitment to Trump that, look, like, let's just sit things here, and then let's get to the table and negotiate once the election is complete, whether that's myself, i.e. Carney, sitting at the table, or Pierre, whoever wins, right? So, you have that happening, which I think will be constructive once it happens. The real X factor is, okay, China tariffs. And if in the meantime, we'll see how much of this sticks in terms of the China factor. But regardless of that, you have a hypothetical versus real world, which is that oil's at $60. That's going to have meaningful impact on inflation. So I don't know. It just feels like a lot of this is offside here.
Yeah. I mean, when the Fed cut in November, assets were screaming to all-time highs. They then cut again in December. Okay, we all know that one of their mandates is financial stability, their shadow mandate. That's true. Everybody, they even say that. It used to be this thing that they wouldn't say, and now they say it pretty much because they've stepped in so many times. But how could you make the case when risk assets are charging to all-time highs in back-to-back months, cutting interest rates, and then coming out midweek multiple times while the market's in turmoil and a bond market's out of control for a lot of mistakes because they made them, cutting into inflation, i.e., and now they're like, oh, not our issue. Like, it's just like their credibility. Like, Goolsby was like in tears on August 5th on CNBC calling in from his summer home. And now he's like, cool. He's like, it's almost like he's happy about what he's seeing. And it's like, it's just like, but I don't think what he says matters, to be honest. Like I think Powell and Bessent have something going on. And I think they're going to be dovish in May. I still think there's a good chance of a May cut. I think probably NQT. Because none of these problems with this basis trade are Bessent and Trump's doing. Like these are byproducts of a really shitty treasury market well before them, and they've known it's a problem for a while. It's just we haven't had a market episode.
I will say the basis trade thing. It's a great way to have a marginal buyer of debt. And it was really interesting that there was an op-ed in Bloomberg where I forget who the author was, but was making the case that we need like a backstop facility for the basis trade, which is just insane to me.
Yeah, but
Like the
that's like
Fed needs,
saying that's like saying that a healthy marginal buyer of crypto is people leveraged to the gills
is perp traders.
Yeah, like give me a break, dude. Like
Yeah,
you shouldn't need
yeah.
that. Like
No, it's so true. It's so true. Um, yeah, I think Powell and Bessent are aligned. If you
yeah,
think about what Powell's been trying to deal with, is he's been fighting Yellen and Fiscal throughout this whole hiking cycle,
yes,
and now you have a point where okay, stocks are down 20%. That I'm committed to this view that is the last thing we needed to get to 2%. So I think he gave them the green light. I'm going to
I
step
agree.
aside for a bit. I'm going to keep my cards close to the table. You guys get this done. We don't have a meeting until May. I'm going to toe the line and not say anything until then. Get equities down 20 or whatever. If that happens, so be it. It's going to be great for my mandate. So now the runway's set. He just doesn't want to. There's no reason for him to pivot today, April 10th, when the meeting's not till mid-May.
Agreed. Why would you? Yeah, why would you store assets now? It only hurt. Totally agree. And you can probably pin that if I'm not saying, like, if you think about it in risk management terms, which is what they talk about, if we get to May and they're not, and the data continues, labor market weakening, inflation weakening, like you could probably like pinpoint the recession on them if they don't cut. Like it is the Fed's job when oil's down 25% and inflation swaps are at like yearly lows, and like it's kind of out of, obviously there was commotion caused out of the White House and Treasury, but it's kind of, now it's like up to the quasi independence of the Fed to act.
Yeah, and to be fair, like part of it was that it was hard for them to react because they didn't know what the outcome of the tariffs will be, and they didn't know what Liberation Day was going to entail. But obviously, the signal is that with how haphazardly the reciprocal tariff numbers were brought up and created, that was going to be the first thing out the door, and it was.
No one saw Pelosi
10%
this week. She was locked in trading, I think.
She was in her desk with her Bloomberg up, like just hammering.
Just Paul.
Tokenization isn't just a buzzword. It's the most efficient way to reimagine how financial assets are owned, traded, and managed. Ondo is bringing traditional assets like stocks and bonds on-chain, unlocking trillions in value and creating open global financial markets. They're not just dreaming big, they're building the platforms, assets, and infrastructure to make it happen. Head to ondo.finance, ondo.finance, and see how they're bringing capital markets on-chain. Restrictions apply. So before we hit record, we were talking about just, we're both pretty tired here. It's been a high vol week, and just this idea of, as we transition from, books being completely cleared out, pod monkeys are already fired, they're out the door, people are deleveraged, and, we're still at a VIX that is above 30, we're in the 40s right now as we close today. And I just want to hear about, like, how do we transition from, like a VIX 50, yes, in 2008, it lasted there for 2 months or whatever. But generally speaking, like, high vol begets low vol. VIX is a reverting idea. Volatility is mode reverting. So as we transition, we're going to be in this transition phase for the next couple of weeks where there's going to be these, these big chop days where we got the 12% rally and then we pulled back, we got down to almost 7% today in equities. We closed it down 4. But yeah, like, how do you think about navigating this, like, locked in on the screens all day long to, okay, my buys are in, I got a margin of safety because we bought the lows, and worst come, I don't really see us taking out the lows. So for me, it's like worst case scenario and break even. So I can just ride this out and, leave my computer. But yeah, like, how are you thinking about this transition to the medium to lower vol as we go through that?
These transition periods are interesting because many people will continue to overtrade into environments. It happens on the upside too, when crypto's ripping or stocks are ripping, you're rotating and sell this, buy this. But yeah, you need to sort of have a view on what market regime we're in and headed to and what we're leaving behind. And starting the year, we, have kind of been talking about cautious views and bearishness and mean reversion. And I think that probably persists for most of the year anyways. But yeah, I do believe like we are at this capitulatory point where you had the VIX above 50 for multiple days, above 40 for like a week, above 30 for like 2 weeks or something. Like these just aren't sustainable. And we've had an assortment of events this week that were sort of the white flag. And so, yeah, I think that yesterday was a weird move because when you get a 10% up day in stocks, like that's like days worth in hours. You know, yeah, that's interesting.
You know what I want to say about that is that people have been comparing it. You know, they run the back test of like, oh, what are the other times that this has happened? And they look at 2020 and 2008 or whatever. They're like, oh my God, you know, this is just the beginning. You know, it's just the bear market rally before the Great Depression. But I think what they're being confused about is that was due to a mechanical implosion of the economy. So it's a sustained deleveraging where then once it's cleared out, it reverts and then continues lower. We've never been in a market event where it's a singular person that can reverse all of it and can do it in an instant. So of course we're going to end up a point where it could be reverted 12% higher instantly. That doesn't necessarily mean it's the equivalent of 2008. I don't know if I said that correctly, but the idea is just that like I don't
it doesn't have to be over. Yeah. No, I agree. I think there's going to be some people tested on the up. I think all the bears are going to be tested on the upside pretty good. I don't know. I think it'll be a volatile next few weeks until we get more clarity. We might not even get clarity on the Fed cutting until the day of, right? It might go into a 50-50 or something so it's hard to say. But I do think, you know, this week it was man, some of these group chats I was in, man. Oh man. I mean, these people lost their minds. I hadn't seen adults talk the way some of these, like what you would otherwise consider well-respected market participants. It was like, man, get a hold of yourself. But like, so it was very easy to be a bear. Now, you know, we've had that. We're in the middle now, let's say. But I do think that bear thesis is going to be tested because what happens if we start ripping off trade deals? The Fed now guides to a cut in May because inflation is not going up this month. Like our next reading, right? I mean, oil's doing what it's doing. So we're going to get basically 3 straight months of good inflation data. The Fed's, you know, we got to pause on tariffs. Like the Fed, they need to be cutting. So they might even cut May, June. And then you might get a tax thing passed. You might get some other business friendly stuff passed. People, don't sleep on how quickly the narrative can turn with Trump at the helm, igniting animal spirits, just like he has done many times before. So I do think that there could be some upside moves. You know, there's still a lot of headwinds on the horizon for the year, but there's a lot of people off sides now too if things don't crumble tomorrow. So it's going to take a long time for the data to really confirm or deny whether we're headed to some economic malaise. And, you know, there's a lot of money that is used to just buying the dip, and they, you know, people might feel stupid if they didn't this time, but
I think you know, there's a lot of people offside compared to, let's just set aside China for a second. I think there's a lot of people offside compared to the upside potential on those deals being made, you know? And I think these deals are going to be quite nuanced. You know, we have Scott Bessent, who's running point on these trade negotiations now. He's going to Japan. Japan's first in line. Why is Japan first in line? Why do they matter so much? Oh, wait, because they're the biggest funding market for treasuries in the world. And they've had an artificially weak currency for years. So, you know, this is not just about.
They're also trade. A couple like dozen, 100 or whatever miles from Taiwan.
That too. Yeah. I mean, there's huge cross currents with that to China. So, okay, you got, you know, the world's biggest bond salesman, as Scott calls himself, showing up to China to get that done. That's, I think a yen strengthening is part of that deal potentially. And so I think the focus is going to be on those type of ideas versus just the pure, because there's the criticism of, okay, well, there isn't actually tariffs against the US, really. Like there is free trade, and to a certain extent there are, but there are these dynamics of, you know, the yen being artificially too strong, et cetera, that need to be sorted out, I think, to clean house before you tackle China. So I think that creates a lot of very interesting, generally speak, obviously, you hear yen strengthening and you think yen carry trade unwind, but I think, it's the signal for me there is Bessent's leading the charge when he's going to Japan first.
Yeah, there's also no coincidence between Trump and Bessent's, like it feels like it comes up in every other press conference at this point. Energy, oil production, alternative energy, a deal in Alaska with Asian countries, a deal in Venezuela, potentially a deal in Iran, two deals with the Saudis. The loser in all of this is domestic U.S. oil production, who's getting clobbered and is borderline unprofitable at the levels we're at. But, unfortunately, there's competing interests for them, because the whole crux of this operation working is bringing down inflation and energy input costs. And they are, again, this is Bessent. Like, he knows this stuff in and out. And so if they're able to keep oil prices down and maybe lower for a considerable amount of time and continue to bring on sustainable long-term sources of energy, unlock oil, people forget that was one of the other, we want to talk about self-inflicted wounds. How about shutting off how about purposefully, relying on Russia for all your energy in Europe, destroying coal, like all these energy plants. Like that was the biggest own goal the West has ever seen. It was crushing their own energy independence. And luckily it didn't get that bad as it did in Europe and the US. And we were able to maintain this position, but it was going down that path. And so there's just a lot of talking on everyone's sides of the mouth, because there's all this virtue signaling about, Trump disrupting things. But again, I just go back to, like, things were pretty fragile. Like, we did a lot of this to ourselves, and there's a lot of correcting that needs to be done. But now that we are going through it and it feels uncomfortable, no one wants to do it. And everyone wants to tweak out in the first inning. And it's like, well, then your surgery is not going to be successful, if you dip out after the opening incision.
I mean, Quinn, let's play devil's advocate here. Is there any other way that you could get every country to the table to discuss getting these trade deals done, with the perspective of, you can't let China, they can't deviate, supply lines through your country? Because, one of the big countries that was the first to fold was Vietnam. And they're one of the first that's also in the front of the line for trade negotiations. And that's not a coincidence either, that, the first thing that would happen with 100% tariffs in China is that all the distribution would go to Vietnam.
Yeah, a lot of our companies moved from China to Vietnam in the last trade war to try and offset that. So I can see that. I can also see them too. They opened their arms to these companies, and they don't want to get screwed in the cross currents, because China's doing some stuff on the global stage. So I mean, how do you reorient global trade without these incentives in place to reshore? Like, it all comes down to numbers and finances. And I mean, you haven't been able to. Germany destroyed their industrial manufacturing base. Look at all these,
destroyed Nord Stream too.
Yeah, look at all these. So no, like, if there was a way to get these people to do something like productive for their defense and security and national interest, it would. I mean, people have been saying the Nord Stream's a perfect example, but there's 10 other things.
Yeah.
So the best way would have been a real war kicking off, and then people would have had the oh crap moment. But I don't know. Like, I guess where people differ is if, like, all these memes around, like, when I give this view, people say, like, Quinn, you think it's a good idea that we manufacture socks and iPhones in the US? It's like, dude, I'm not. You think I'm going to advocate for, like, my people like I care about to go work in these types of factories? No, but like, does someone got to do it? Sure. And also, people are also misunderstanding of like how important Canada and Mexico are in this, because the unison and uniting of this almost North American trade bloc is going to be, I think, a factor in getting some of these other deals to the table and things. And look at the cost of labor in the U.S., Canada, Mexico. We need Mexico to an extreme amount. There's things that Trump wants cleaned up on drugs and the cartels and border security, et cetera, but we're going to need them in a big way. So you just got to look through to like substance and like actual incentives. And I think it's all with good intentions. Like, again, it might not work, and maybe I'm completely wrong and everything crumbles. But yeah, I mean, if you ask the middle class, everything's already been crumbled for a long time. So
Totally. I mean, this is like, Mike Ippolito has said this on so many podcasts for years that I've listened, our great CEO and founder, but he always talks about the idea that one of the greatest mistakes that the Western world has done is, the sacrifice of, middle class income jobs in the US being exported to China in exchange for cheap goods. Like, he said this a few times, and there's some great interviews out there of some folks in geopolitical strategy. Forget the name of it, we can find the link for it, but back in the 80s, warning that this isn't a good trade-off. Having $2 trinkets in exchange for just losing our entire middle income class and moving it over to cheap labor in China is not a good trade-off.
Here's like an example. Everyone's like, it's basically a class system. It's not a red and blue thing, because rich Republicans are probably at as much hysteria levels, maybe not quite as rich Democrats, but everyone who owns a lot of stocks is really upset because they piled into Mag 7 in January when they got bowled up on Trump and they got the rug pulled. And those people are saying, how could you possibly reorient the structure and balance of our economy and all these things? An example on the other side, just to like give people context who might not think in this light, is, when did like, the 60-70% of middle class and below citizens appoint everybody in the upper class in the West, Europe and US, to say, raise your hand and say volunteer? No, actually, I want to pay 50% more for my energy sources. I want all these restrictions on natural resources. I want to pay up for cleaner energy. I want to destroy, coal and, oil production. And these, like, that's a tax. If you have a lot of money, sure. I drive a Tesla. Like, I would like to save the environment, all these things. But, if you don't have the means to, that's a choice. We're choose all these energy sources, all these things to these Green New Deals, all these things. That's a choice, and there's a cost to that. And people are making that decision not with the middle class and lower class in mind, who spend what percentage of their paychecks on gas and groceries and daily living expenses. So that's an example of these things where it's like, well, how could Trump say he wants to like bring manufacturing back or change how this global trade supply chain works or whatever? And it's like, there's always give and take. And I think the message is probably that there's a lot too much take on one side and not enough give, and it needs to be balanced. I think, I mean, like, it's not the end of the world if stocks go down 20%, maybe because of how financialized our system is. Yes, but okay.
Yeah, but if the 30-year goes above 5, that is an issue, and that's where the put is. It's going to be really interesting to see this week if we touch it again, what would happen.
I think there is, in this case, for the same reason Bessent didn't start terming out the debt ASAP. Yep. In his first QRA, everyone's like, oh, why'd you shit on Yellen, but then not term it out? He's like, this is QRA 1 of 16 on a long path to reorienting this economy on sustainable footing. And in the same way, like, there's probably a reason to use QE to some extent here and not a, blanket, like, buy $2 trillion of MBS and everything else under the sun way. to stabilize markets here so you can effectuate.
Back in August, or I think it was last August, I brought up a paper on this Roundup talking about, it was at the Jackson Hole Symposium, where there was a paper out that showed what would it look like for the Fed to repeat what the Bank of England did during the Liz Truss moment. What does it look like to do temporary targeted QE that you then unwind a few months later? And I reposted it last week, and I said, freshen up on this, because I've been a hater on the QE thing, and mostly just because of the lack of knowledge from some of the people that are making these takes around it. But I will admit that there's a compelling argument to see a Bank of England style targeted, Liz Truss analog QE, get the 30-year bond down, and then as the situation ameliorates, then you unwind it off again a few months later. I think that's totally compelling.
Yeah, I mean, if it's like when you're an alcohol addict or heroin addict and you're abusing for 365 days straight, if you stop, you go into shock and you basically die. Mm-hmm. And when you go to get fixed, it's true, you get fixed. They actually basically give you dosed out, substances to whatever you're on. So your body doesn't say, what the hell's going on? I don't know how to operate without this. So to think we're going to get off the fuel, spree of what we were on without any bumps along the way is ignorant. And I believe it's when have we had a Treasury Secretary talking like Bessent is about actually doing these things to like put the country on sustainable footing? People, like, all people do is joke about Doge and point fun. Elon's not going to cut this much. At least they're doing something. Like, I mean, I don't know if it's going to work. I don't know if they're cutting the right things. But you got to start somewhere. Like, you got to at least get outside. If you're 400 pounds, you got to like take a couple steps outside, see where it goes. Then maybe you can jog, then you run. I don't know. You got to try things. And so, like you said, Powell's got to be ecstatic that he's not going toe to toe with someone who's just juicing the markets. And that's why I think, one, he was comfortable ending QT in last meeting, which was a dovish tilt. And I think he will continuously be comfortable, because it was going on Twitter. I think it was that Geiger Capital or someone was saying like Trump is Volckering himself. He effectively, that's what he's doing. He's Volckering himself, and Powell, that's music to his ears. So I don't know why Powell wouldn't play ball here. I think he will, because I think it's the right move.
Yeah, I totally agree. Okay, this ties in well to the last topic. On the topic of liquidity and all that, you said you think Bitcoin's going to hit all-time highs by the end of this year. What's your read there?
Yeah. Well, I look at the price of oil and I'm like, man, that's pretty good for inflation. I mean, I'm also talking about geopolitical risk and other things, which would be bullish for the price of oil and not good for inflation. But I think, and then between that and what you're seeing going on in the bond market, I think in order to quote unquote land this plane, there's going to need to be more massaging and liquidity provisions and things of that nature than people are expecting. And I believe that those facilities or rate cuts or whatever they are probably not going to, because the economic inertia is sort of petering. When you get those things and you're in the ascent in the economic kind of momentum and earnings, it's just like, super power. Yeah. In this environment, I think Bitcoin relative to most assets, like everyone was freaking out on Twitter last week about the quote unquote decoupling and the relative strength. And, but there is some truth to that in how it's holding up. And so I think that added liquidity does more for the bull case for Bitcoin than it does for the bull case for Mag 7 earnings, let's say, right? So, and if you look at the dollar today, like, wow. So yeah, it'll be interesting. I mean, it's, we got a long time left before year end. So it definitely was not a, like, I think we're zooming to all times imminently type of call at all. But it just, I can see it feels like we're in a better place now where positioning and things are, and what liquidity will be needed on the horizon in order to not totally break things.
Yeah. Yeah. I like that framework a lot. I think it sits a lot with this trade I shopped around of like the short NASDAQ, long Bitcoin idea. And it ties into a lot of those ideas. And I think it's also, like if we just take up this like wartime framework, even if it's just economic war of the Western world lining up against China, we're already seeing a lot of announcements. They're mostly related to offsetting tariff impact in terms of the fiscal stimulus. But I think the narrative is there, which is that rest of world fiscal is going to increase and offset whatever decrease we see in the U.S. Because if you just look at fiscal deficits, like the U.S. has been the one running the huge fiscal deficits and keeping so much of the global economy afloat. And I think now we're going to see it pass the baton, and we're going to see the rest of the world take up that mantle. And I think that's super bullish for Bitcoin.
Well, we'll leave we always like to drop these alphabets in the back of the show. But if we said, months ago, when things were normal and the U.S. economy is ripping and everybody, if we said Dixie at 100, oil down in the gutter, what's happening outside the U.S.? I mean, the amount of room that gives, because remember, one of the reasons 2022 was so bad for everywhere else except it wasn't great in the US, but it was bad everywhere else. I mean, we're talking 10% inflation in the UK, all these places, because they import energy. Japan, huge energy importer. Europe, huge, So now all their currencies are way stronger and their energy costs are down. Like, if we tip into a global recession, that's not good for anybody. But on a relative basis, that's really positive. It's disinflationary, the strong currency and lower energy prices, and allows them to stimulate more, whether that's fiscal or monetary. So, yeah, I think there's I think it's a long road ahead. I don't think we're going to just nuke into a big scary thing right now. And now that everything got thrown out with the bathwater, yeah, there's probably a lot of opportunity out there. And we know Bitcoin's a global asset that can do well when liquidity is being added. So
yeah, to me I pretty much agree with all of that. I think the last tail risk for them to stick the landing on this is not losing the bond market, but they're focused on it. But it's sort of this weird oxymoron where we're talking about how the Fed is and should keep their cards close until May, but also in the same vein is that if you keep seeing deterioration in the bond market, we might need something to happen sooner than then. But to me, that's the last piece of this puzzle here is, with oil at 60, Dixie at 100, if you can just get a handle on long bonds, I think we're pretty well set. But that is where the tail risk remains, in my opinion.
I agree. So many things in the economy and world are tied to the U.S. 10-year yield, and global bond yields kind of cue off each other. So I didn't buy bonds, but man, when I see like all of Twitter watching a 10-year US Treasury auction and everybody bond market experts now, it's like
crypto Twitter is short bonds right now. That's all I gotta say.
That's one of those things where that's like, you almost gotta just put some lunch money on the other side of that, just because out of principle, when things are that loud and people that have no business talking about them it's like, that's like the 10-year-old in the class saying he bought gold type of data point, right? So I don't know. I
mean, we're idiots too sometimes. So to be fair.
Oh yeah. I mean, so it just seems like, and two, right? If financial conditions loosen up a bit, balance sheets expand, vol comes down, because that's a big thing, right? The amount of margin and lending these guys can do when vol's at 50 and the moves at 170 is a lot less than when things normalize. So it feels like there's some, releasing of that pressure to happen. not saying yields are going to go down to 3.5 or 3.8 again, but like, you know, if inflation, you just showed all the charts showing how out of whack it is. If it truly is a basis trade thing, that will settle one way or the other. Like,
yeah,
you need people to be more comfortable stepping in once the vol subsides.
exactly. Yeah, you just need to move down, and then, you know, people coming in spades. All right, man. I think we can leave it there. Big week. I am super excited to rest and not look at my screen for a little bit. I don't know about you.
Yeah, and then we're doing tomorrow.
We're doing it again tomorrow. Yeah, this will probably be out by the time that we're recording on
yeah.
Empire, but we're going to be on Empire tomorrow with Yano. So chopping it up again.
I'm sure that's what people want, is just another hour of us idiots talking.
So it needs to shut
That'd
us up.
be fun.
Yeah. It's gonna be good. All right, man. Take care.
Good stuff. We'll make that one more crypto.
Yes. There you go. We won't macro larp too much.
Sounds good, bro. Have a good weekend.